Good evening. Welcome to the ShadowTrader video weekly for Sunday, May 13th, 2012. In past videos, I've been talking about the target for the market coming down into the lower end of the channel. And as you can see, that's actually played out quite well. We've gone right to that area and we've stopped. We haven't sold off through there. You can see that if you draw these channel lines just like this, connecting these two highs, the S&P made just very small forays below the lows. And that's definitely playable because if you look at the ES, right, look at the futures, it's literally to the penny. So this is a really important concept that I want to drive home about the channel lows because as I've said before when I was showing this like last week's video and I think in the time before, remember that most people are going to always just focus on an uptrend, right? And they're going to go like this and they'll make a channel out of that, okay? And they're going to focus on the low side of an uptrending channel, but they're not going to focus on targets of a downside of a downtrending channel. So it's something important to sort of switch your thinking to be thinking about that. That's really where targets occur for shorts, and that's also where markets tend to turn and move sharply back up the upside when the bottom end of a channel is hit. All right, so last weekend I had the pleasure of heading out to Chicago and doing a seminar with James Dalton, who is probably the leader, I think, in the field of market profile, which is the chart that you're looking at in front of you. Those of you that have been following my videos for some time now know that probably over the last year or so, I've gotten more involved in using market profile in ES trading and also just to gauge moves in the market and whatnot. And it was a really illuminating experience for me. I must say it was wonderful meeting this gentleman and also just learning some of the nuances that go into reading the profile. So if you're interested in that sort of thing, I'm obviously carrying that knowledge forward into my blog every morning, where it's right here at shadowtrader.net, and just click on blog, and I have got a pre-market piece every morning that I write, and I put it out on Twitter. The Twitter address is going to be at the beginning and end of this video, and I tweet every morning when it's posted. It's usually between 9 and 9:15 a.m. Eastern. And in this blog, I'm obviously talking a lot about what I think is going to be where the key levels in the ES are going to be for that particular day, and using a lot of the concepts that were just that I learned in the seminar in the post there. So I think you guys that are into the profile, you'll enjoy that. But looking at the profile now over what's going on currently, and these are the last 4 trading days that we have in front of us, we can see that basically price-wise and value-wise, right? Value is the area in the black brackets where 70% of the futures volume of the prior day went off. Has really gone nowhere, correct? We have essentially come down to the low end of the channel, and we'll get back to the technicals in a moment. But since then, we haven't moved at all. And we've also exhibited profiles here that are very balanced. Balanced meaning that they have excess on both sides. They have tail up, tail to the downside, tail downside, tail up. They're this one is really like a perfect normal distribution, very, very balanced. So it looks like the sort of typical bell curve, which is really anything but normal. This is called normal distribution, but it's not really normal in that it's relatively rare. Here you have kind of a double distribution. We have elongation. We just have basically a good healthy size range, but price hasn't moved much and value hasn't moved much. So my first takeaway from this is that you've got 4 days of consolidation here after a sharp move lower. So price is essentially finding what is known as acceptance in this area. That means that given what the profile looks like, and we can see that price has balanced in this area for a while, obviously there's a tug of war between new shorts coming in, perhaps some short covering. We don't know this yet for certain, but obviously the market is balanced here. So if the market is coming into an area of balance after coming down hard from an area much higher, my first inclination is obviously to think that the market should go with, that we should move further lower. Price is just accepting here. Notice that short covering in the market has not been able to take the market much higher at all. We can see here that even on these 2 days when the market was bottoming, right, the bottom was here was the day when we actually made the low right down to the channel, to the low end of the channel, and you can see that here in the chart, right? Notice that price didn't go much lower. Correct. And on that day, value didn't change. We had overlap. We had almost perfectly overlapping value. And then there was a little bit of relief the next day. But once again, instead of value breaking sharply to the upside, right, and moving out, we had overlapping value. And then the next day, on Friday, again, completely overlapping value where it was really kind of like engulfment, where the entire value area of Thursday is inside of Friday. So the market didn't really move at all. You have complete acceptance here. So there's a huge amount of balance here. And if we do break to the downside, which I think we will, and I'll get back to the technicals in a second, there should be one more relatively large move, which I don't think will be as large as the first move, right? Meaning this move here. There will be another move to the downside as all of this balance then, acts as overhead supply. So we shall see. Now, obviously, going back to the charts, this can happen both ways. So we have to keep ourselves ready for both moves, although I think the move will be to the downside. But what do you think would happen, for instance, if all of that balance then, value started to migrate higher, and then some of the fear came out of the market? Could be a snapback move to the upside. But I think that the move here is going to be down, given the sort of reaction tone of the way the market's been acting since it came down, balanced heavily, was not able to move higher. The last move when we moved out of a balanced area was higher to a lower high. So even if we were to revert to the upside out of this area, I would again be looking for a lower high, possibly a halfway point here. If not, then definitely the high end of the channel. I wouldn't think that we would break out to an up move here in this point. Now, one of the things that I'm always looking at is the intermarket analysis of the other major averages to give me a better idea as to which way the move could be. I will tell you that in looking at them all, they all seem to be confirming this. Obviously, they have very, very similar patterns. The Dow is most interesting in that there is no real downtrend yet established. That is really important to note. There is not yet any downtrend established. We can think of the downtrend as being like consecutive lower lows, right? And we really haven't gotten that yet. There really hasn't been two lower lows. A low is an area where you have a low like this, bookended by two higher lows. That's called a low. You really haven't had a significant lower low here in the Dow, so it could break and start to form that downtrending channel. In the NASDAQ composite, it's a composite. Whoa, slow down. It's essentially, or I should say especially interesting in that we made a lower low here, but we did not even break out of the uptrend of the channel. Notice here in the NASDAQ cash market, it still really hasn't broken. These two lines here connect perfectly. We still haven't broken. So I'm very curious if the S&P is not able to break lower, and we know where the lows were put in earlier this week, what will happen if the NASDAQ composite comes right to that trend line? Or perhaps the NASDAQ composite breaks the trend line and you have sellers, hitting the tech stocks en masse right at that point. We shall see. Russell, same thing. Correct? Similar to the Dow in that you had only an exploration of price lower here, but no real definitive lower low put in. All right, so while the signals are a little bit mixed, I still think that I key off the S&P and use that as my gauge, and it still looks to me like further downward pressure. Another thing that comes to mind when I'm looking at it and trying to figure out where that next move is going to be is the simple fact that the trend channel that you're seeing here, moving from left to right, which is the new current downtrending channel here, is not very steep, and therefore I mean that it could get steeper. We could see a break in price to at least move out of the channel, because think of a channel that's not very steep as very, very similar to a consolidation. It's really kind of similar to like the Dow here, which is going sideways. When no market or stock can go sideways very long without then breaking out of that pattern and moving into a steeper angle, so to speak, right? Similar to here, where it's very flat in the Dow, and then it turns and you start to get a channel that's a certain angle to the upside. So that's something to think about, right? Last thing I'm going to leave you with in terms of looking forward as to where we may be headed and which way and to why it seems to me that the move would be down is this chart here of the Aussie yen. Some traders use the Aussie yen as a proxy for risk, basically thinking if the Aussie yen is going up, risk is on. If not, risk is off. And the directional break of the Aussie yen can foretell the market. Here we saw the Aussie yen was not able to hold its uptrend, and right at the time when it was not able to hold its uptrend is right at the same time when the broad market and equities started to collapse. So I've been looking at this Aussie yen chart, and noting that it's come in quite a ways off the highs, I immediately threw a fib on it, right? That's the first thing I think of when I see a market coming down into a range after a big move up. Put the Fibonacci on it, and notice this. It's very interesting. You got a bearish pattern here. Looks like it wants to make one more move lower, and look where the 61.8 is. It's right here. So if the broad market was to make another move lower, which I was saying I believe will be a smaller move than the first one, maybe this is the key, is that this AUCN needs to come down to the 61.8 and find some support there, and that may be, you know, a turn in equities as well. So we shall see. So something to do. Keep an eye on the AUCN at the 61.8. On the topic of the Australian dollar, I'm going to end it on this note. The ShadowTrader Pro FX trader just came off of a really strong euro trade, a couple of really strong trades. Euro USD, which Blake shorted right at the high here, right at the trend line resistance, and then caught the move all the way down under $1.30, which worked well. And I think he had a euro NOK that worked out well before that. I believe so. And in the spirit of that, I was looking at some Aussie charts, and I noticed the Aussie CAD, and that newsletter now has a long, right, just above $1, like a few pips above $1 at parity on the Aussie CAD. And I think that it's a great play, and I think the Aussie CAD is also going to be a buy all the way down to 99 cents. Notice that there are swing low spikes here that are very, very short-lived, and whenever this pair comes close to parity between the Australian dollar and the Canadian dollar, you get a nice lift to it. So I think it's a buy anywhere at 1 right here, and then it's also a buy again if it breaks further, basically anywhere down to 99. So you've got a range here, you know, and this is $1 a pip. So that gives you kind of an easy way to calculate the risk. So for that whole penny would be $100. All right. So that's the state of the markets for now. Good trading to you. On behalf of myself, the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.